What is up, you guys? With earnings coming out tomorrow for Netflix, I felt that it would be important for me to kind of make a video of some things that big money is looking for. Now, this is good for somebody if you are an investor in Netflix, if you're thinking about taking an investment in Netflix, and overall, if you're just an investor in general, because Netflix is part of FANG, and FANG's earnings are going to be extremely important, in my personal opinion, to see where the market goes from here. If we have a great Q4, we should see the market continue to push up into all-time highs like we've been seeing today. We had a very, very good day as well. Looking like we could push back up to 455, 460 on the SPY. So this is going to be an important earnings. We do have, this one coming out for Netflix tomorrow, and then we also have Tesla coming out Wednesday. So I'll probably do a Tesla video to maybe tomorrow. I'll release it, and then the rest for like Apple, Amazon, Facebook, Microsoft, etc. So hit the like button, subscribe to this channel, guys, and let's take a look at what we will be looking for Netflix. So Netflix is experienced an acceleration of subscriber growth last year as people sheltered at home and increased their consumption of streaming entertainment during Roni. However, the pace of viewership gains has slowed this year as the economy has opened up and the streaming market has become a lot more increasingly competitive. That has prompted Netflix to seek faster growth by expanding into video games. The company made its first game in studio acquisition late in September, purchasing Night School Studio. So obviously, last year they had a great year as far as subscribers growth is considered. That is like the big metric that we are going to be watching here for Netflix, and that we are always watching for Netflix. It's always subscribers growth. They can beat on the top revenue, they can beat on the bottom line revenue, but if subscriber growth is not good, we tend to see a significant sell-off. And you can see here, last time in April, we had this big sell-off here for earnings, and this was subscriber growth numbers. Same situation that we had back here in July of 2021, subscribers numbers. So last quarter as well, subscriber numbers did not hit the benchmark. So that is something that's going to be very, very important to watch going into earnings tomorrow. And the other thing too is the fact that there's just a lot more streaming services around as competition. If you look at this company over the past 10 years, 10 years ago, there was none. Then you look at 5 years ago, okay, a couple are popping up. Then there's word that Disney's going to come out with their own, Apple's going to come out with their own. And now look at it. Everybody has a streaming network. Discovery, you have Apple, Hulu, Roku, which is Peacock. You have obviously Netflix, like we talked about. You have the HBO. You have literally like all of the Paramount. Like there are so many out there that what Netflix offers might not be what somebody wants, because they used to have licensing deals with all these other companies, all these other shows in order to show their content, and now they don't. So obviously for the past 3-4 years, Netflix has been, heavily relying on their own studio and making great shows, which they have been able to do. It's just the fact that it costs a lot of money to do that, but we'll talk about that later. So obviously, subscriber growth did not hit what expectations were last quarter, and a lot of that is because year over year, so back in 2020, obviously subscriber growth went up through the roof because so many people are at home during the pandemic. So we'll see how they end up doing with these numbers now, and then also the fact of the whole video game sector as well within their company. So investors will be watching to see if Netflix can overcome these headwinds and maintain its strong financial performance when the company reports earnings on October 19th. Analysts expect both earnings per share and revenue to expand, but at a slower pace than recent quarters. So we should probably be able to beat the top and the bottom line. I would very much so expect that. So investors will also focus on Netflix global paid streaming subscribers, key measure of its monetizable user base. The company surpassed 200 million total global subscribers at the end of fiscal year 2020, but growth has been slowing dramatically compared to last year. Analysts expect a slight acceleration in the pace of growth in Q3 compared to the previous quarter. The key metric, like we spoke about earlier, guys, as mentioned above, investors will also focus on the global paid streaming subscribers, which the company refers to as global streaming paid members. The metric indicates the number of global users that have signed up and paid for the subscription to receive the streaming services. Currently, streaming memberships are Netflix's primary source of revenue, but video streaming has become increasingly competitive in recent years. Netflix now threats from rivals like Apple, blah, blah, blah. We talked about that earlier. The company is starting to venture into other areas in the entertainment industry, such as streaming film, TV market, or into the other industries as streaming and TV becomes increasingly more saturated. For years, and analysts are expecting a forecast global paid streamer subscriber to rise to 8.65%. And one thing you have to understand with Netflix is that basically the United States is tapped out. We should at least say North America. Not fully tapped out, but like 80 to 90% tapped out. Every single person that you guys know probably has access to Netflix. You have to have access to Netflix. Now, that might not mean that you are the one who actually has a Netflix account. You might use somebody else's Netflix account, but their ability to grow in the US is very, very slow. The two ways that a business like Netflix makes money is one of two ways, right? It's either one, they bring on more customers, or two, they jack up the price of the service. And they have done that in the past, and they will probably continue to do that in the future. But there's only so many people you're going to keep by jacking up the price because there's so many competitors out there. So what they really need to do is to grow their subscriber growth out in other countries. And that's what we need to see with the subscriber growth number going into this quarter, because they can't continue to jack up prices. So they're going to need to bring more people in. And at what cost does that take? Now, from a technical standpoint, we do have a really strong consolidation range right here. You can see that basically from this push up in June of 2020, which we finally broke through this price range here at 425, but from this breakout finally in 2020, we've just been sitting here. And this is really how Netflix moves. Even if you're a long-term investor, these types of price movements are important for you to understand, because this is how the stock really trades. And if you're, like I said, if you're a long-term investor, it's important to even understand this as well. The stock tends to sit, consolidate sideways for a year and a half to 2 years. We sat here from April of 2015 all the way to February 2017. So nearly 2 years. Sat completely sideways, then a major breakout. Then once again, during the pandemic, we sat here, even prior to that, in 2018, we sat from 400, between 400 and 265, sat here for 2.5 years, finally broke out. Now we've been sitting here since last June. So basically 1 year, we'll say 14 months, we've been sitting here between price point of 577 and 475. And now we're finally breaking out. We're up to 635. So from a technical level, it does look like we could see Netflix push up to $675, maybe even $700 within the next couple of weeks. And then also watching how big money has been buying this over the past couple of months, it does seem like big money is bullish on Netflix. I don't own any positions in this. I don't really plan to own any positions in this. I really don't like Netflix long term, to be quite honest. I think the company is very overvalued at this point. They're running at a PE ratio of 66, and I think that from the company's standpoint, they really need to focus on, and it does seem like they are, changing things up, kind of the way that Apple saw massive decline sales in the iPhone years ago. And so they knew if we're going to want to continue to grow, we're going to have to switch it up. We're going to have to start with wearables. We're going to have to work with headphones. We're going to have to make this more of a service-based company. That's what we're going to need to do. I think that Netflix has to do that before I become a bull, or before I would put a buy rating on it personally. But I do think that they will have good earnings. I do think that they will squeak by with expectations. And I do think its stock will probably move up to $675, maybe even $700 in the next couple of days. Guys, let me know what you think. I'd love to hear from you. Hit the like button, subscribe. I'll do a video on Tesla tomorrow for you guys. Also, go ahead and check out our free Discord. The link is in the description. It's a great place to hang out with other investors like yourself and traders. And it's just a great community to be a part of, guys. Have a great day, and I'll see you next time. Peace.